All right, let's talk about Bollinger Bands. They're one of the most popular tools in trading, but honestly, they're also one of the most misunderstood. Today, we're going to cut through all the noise, get past the common mistakes, and I'm going to break down a really powerful expansion strategy that the pros use to catch those huge market moves. Just let that sink in for a second. The reason so many people struggle with this tool isn't because the tool is bad. It's because they've been taught to use it in a way that literally has them running straight into a brick wall. See, the big institutions, they're playing a completely different game with it. Yeah, that is the million-dollar question, isn't it? So let's unpack it. We're about to dive into the exact logic that institutional traders use, the logic that helps them spot and, more importantly, ride those massive trends in the market. Okay, so before we can learn the right way, we have to be super clear on the wrong way. We need to talk about the Bollinger Band trap. This is the common advice that, just keeps most retail traders completely stuck. This is what you hear everywhere, right? You're taught to see the bands as these simple support and resistance lines. So price hits the top band, you sell. Price hits the bottom band, you buy. But that just completely misses the entire point. When a trend is really strong, the price will literally ride the upper band up. And when it's weak, it'll ride the lower band down. Trying to trade against that? Man, that's just a recipe for fighting the trend and losing money. So if that's the trap that everyone falls into, then what's the secret? Well, it all comes down to understanding what Bollinger Bands were actually designed to do. And I'll give you a hint, it has nothing to do with support and resistance. This right here, this is the whole game. It's a fundamental shift in how you think. On the left, you've got the amateur, who's just confused, looking at price levels. On the right, you've got the professional, who sees the energy underneath. See, Bollinger Bands aren't about price. They're a tool for reading volatility. Their whole job is to tell you when the market is quiet and when it's about to absolutely explode. Think of it like a coiled spring. When those bands squeeze together, that's the market getting quiet, building up potential energy. That's the calm before the storm. But when they suddenly expand, and expand violently, that's your signal. That's the big institutional money making its move and creating a huge wave. And our job isn't to predict the wave. It's just to be ready to ride it. And you know what the best part about this whole strategy is? It's so simple. We're just using one time frame, the daily chart, which is perfect for swing trading. And we're using only one indicator, just the standard Bollinger Bands. That's it. No RSI, no MACD, no indicator overload that just paralyzes you. We want a clean, simple chart that's focused on one thing and one thing only, volatility. Okay, time to get into the really actionable stuff. Let's start with the precise step-by-step rules for a long or a buy setup. The process is just 3 simple steps. Step 1, the squeeze. The market gets quiet, it coils up, it builds that energy. Step 2, the breakout. You get a big, powerful bullish candle that closes outside the upper band. That's the energy being released. And step 3, and this is crucial, the confirmation. The price has to hold its ground, proving that the big institutional buying is for real and not just a fake out. Now, once you have the signal, how do you manage the trade? Well, you can get in as the price breaks the high of that big breakout candle. Your safety net, your stop loss, that goes right below the middle band. And now, here's the key to making the really big profits. There's no fixed price target. You just hold on and let your profits run until you see a full candle close back below that middle band. That is how you catch those monster moves. Okay. Let's flip it around and look at the sell setup. And what's great is that it's the exact mirror image of the buy. It just reinforces how simple and powerful this logic really is. The logic is completely identical, just in reverse. First, you need that squeeze, that period of low volatility. Then, you're looking for a strong, bearish candle to close below the lower band, showing you that sellers are now in control. And finally, you need that confirmation that the weakness is real. The price just can't get back above that middle band. And managing this all trade? Perfectly symmetrical. You can enter below the low of that breakdown candle. Your stop loss goes just above the middle band, which is now acting as your resistance. And you only get out when the momentum fizzles out, which we define as a full candle closing back above that middle band. Simple as that. So, having a great setup, that's one thing, that's fantastic. But any professional trader will tell you the real money isn't just in the strategy. It's made or lost in how you manage your risk and, well, how you manage yourself. I really want you to let this one sink in. This is the absolute truth of trading. You could have the best system in the entire world, But if you don't have the discipline to follow your own rules every single time without exception, it's just not going to matter. So let's talk about the rules. Rule number 1, and this is non-negotiable, you have to preserve your capital. Never, ever risk more than 1 to 1.5% of your account on any single trade. This is your shield. This is what keeps you in the game long enough to win. Rule number 2, stay focused. Don't overtrade. You don't need to be in 10 different things at once. Just limit yourself to a maximum of 3 to 5 active trades at a time. It's all about quality over quantity. This ensures you can actually manage your positions without getting totally overwhelmed. And finally, the psychological rule. This one's all about what's going on upstairs. You have to accept that losses are just a normal part of doing business. It's going to happen. So when a trade hits your stop loss, you close it and you move on. You absolutely do not jump right back in to try and win your money back. That's called revenge trading, and it is the single fastest way to blow up your account. And that really brings us to the ultimate takeaway here. We are not in the business of prediction. We're not fortune tellers. We're in the business of observation. We use Bollinger Bands not as some crystal ball, but more like a scanner, a tool to detect the footprints of institutional money. When we see those footprints, we follow. We trade the expansion, not all the noise in between. So I'll just leave you with this to think about. What if the real secret to all of this trading stuff isn't about finding some magic indicator that predicts the future? What if it's just about having this simple discipline to execute a solid plan over and over and over again? Because ultimately, that is what separates the pros from everyone else. Thanks for watching.